So my name is Can Yazıcıoğlu. I'm the CFO for Vineyard Vines. I've been at the company now for, I guess, close to a year. Started in January of 2020, and 8 or 9 weeks after I started working, the COVID crisis hit, and we had to all move to remote working, and I've been working from home since. I can start, I guess, talk about, what was kind of going through our minds at the time. So, I'll start kind of around, I guess, January, February timeframe when, the news around, a potential pandemic, starting to make its way across, I guess, the pond and from China, spreading throughout the world, started trickling in. At the time, none of us gave it much, credibility in the sense that, we had gone through, I guess, the SARS and the avian flu and all those things, which made a lot of noise in Asia, but it never really impacted the US, right? And so at the beginning, it was kind of background noise, and really we had no, tangible planning around it at the time. Then I would say it's probably late February, early March, it started to look like it was becoming a real thing in the US to the point where there could potentially be ramifications in terms of, changes to way of life, restrictions around, businesses and people's movements and things like that started becoming real right around, I'd say, beginning of March. And then mid-March, basically March 16th, Monday morning, we made the call over the weekend, that weekend of the 14th and 15th, to essentially not open our stores for business starting Monday morning. So it really crept up on us, I would say, pretty quickly. It wasn't this, long in the making, couple of months heads up, plan for it, prepare for it type of event. It really went from, oh, it's something out there in Asia happening, to immediately, oh my God, it's here, and we have to shut down all of our stores, on Mondays.
I'm Sanjay Shrikant. I'm a partner and managing director at Alvarez & Marsal in our consumer and retail practice. And I've served clients globally for 25 plus years in consumer and retail, and have never seen anything like what my clients have experienced this past year. And in the last, I guess, 9 months, it has been a real eye-opener for different clients, regardless of what sectors or subsectors they play in. It did sort of hit us all of a sudden, right? It didn't creep up on us, and maybe that was just us not paying attention as a nation. But I remember probably early March, from an Alvarez & Marsal standpoint, we were still getting a fair amount of calls saying, hey, we want to work on these kinds of engagements, and the engagements were focused on growth and performance improvement and et cetera, et cetera. And then mid-March, probably around March 12th, 13th, is when everything sort of hit the fan all of a sudden. And the conversations almost instantly changed to, okay, what do we need to do from a liquidity standpoint? And there were questions being asked saying, hey, do you guys think that there's going to be a run on the banks? Should we draw down our revolvers and whatever access to capital in cash that we have? How do we then, the second part was, how do we preserve cash as long as we can? What are all of the things that we can do?
Like Sanjay said, the first concern was about, access to cash and credit and liquidity, but primarily access to existing credit. Because the concern around, a run on the banks or a credit freeze, similar to the type of, concerns that were around in the 2008, 2009 crisis, were, back on the table again. So it becomes a kind of a race against time in terms of, okay, well, if I think everybody else is going to be drawing down on their credit facilities. Well, I need to kind of beat them to it, so that I'm not the last one, and the bank says no more. So it became that kind of, we had to make that quick decision, and so we did. We actually drew down on our entire revolver on Friday the 13th, and from an abundance of caution, really, and then on 16th shut down our stores. And once we shut down the stores, the next big discussion was around, obviously, all right, so what do we do about rent, and what do we do about payroll in those stores? And the rent one was I guess a relatively easier decision to make, and we basically said, if we're not able to operate the stores, we're not going to pay rent, and we'll figure that out afterwards. So we essentially had already sent March rents in. So starting with April, we stopped paying our rents in every single one of our stores, as well as our home office location. And then the store payroll piece was more complicated, given we still didn't quite know exactly how long this shutdown would last, and the risk of losing store teams that are obviously experienced and know the brand and know the customer is a huge risk in itself, right? You don't want to lose your workforce who knows your brand, who knows your business, who knows your customers. And in our business, especially in our brand, there are a lot of customer relationships built at the store level. So all of that is an asset that you don't want to just throw out the window, unless that's your kind of last resort. So we made the decision to kind of wait and see. And as time went by, and we were able to impact other things to shore up our balance sheet, and to kind of address other cost lines in the business, we were able to stay away from impacting our store teams and associates.
In March, when everyone stopped, they realized that everything was going to shut down. The first kind of call was to really have this conversation with some of their peers, right? So it was a rampant dialing for dollars to talk about, what are you going to do? What are you going to do? And that really is kind of retail at its core, is being able to call your peers and be able to talk to them. And that was a big conversation. And so early on, there was the decision about, and what was foremost at the forefront, I would say, is three things. One was payroll. I was pleased to see that they were most concerned about their people. That was number one. Number two was rent, right? Because the two biggest obligations were obviously payroll and rent. And then the third kind of thing back in their mind was, we're going to get stuck with some inventory in that conversation, but really, what do we do about rent? But the rent conversation, they were nervous. This is new territory. No one's ever just stopped paying rent for the fun of it, right? Or because they had to survive. And there was a lot of calls, not just to us, but to everyone in the industry. And you have a major retail event when you can put out and crowdsource an email to a couple people, and you set up a phone call, and the next day you have 150 C-suite executives on a call that you don't know, because they want to hear what the industry is doing. That's when you have a very significant major event. And it was in that decision that everybody realized nobody was going to pay rent. They couldn't. It's not because they didn't want to be good partners, but in all intents and purposes, if they were going to survive, they needed to be able to withhold the rent. And so communicating that and how that was going to be communicated to the retail community was the next question. Do we communicate it? How do we communicate it? Are we up front? Who's talking to the landlords? What's their perspective? Are they reaching out? And that was really the first kind of wave of what happened.
I'm Cheryl Carner, Senior Managing Director and Head of Originations for Crystal Financial. Crystal is a provider of direct credit. We have an ability to work in concert or in conjunction with banks to provide retailers incremental liquidity. For the most part, many retailers, 70 to 80% of their volume comes from the stores. And nobody builds a business model where you can withstand a 70, 80+% decline in your revenue. So it really was a completely draconian situation. And retailers did many, many things in terms of stopping, payments and stretching payments, whether it was to landlords, to merchandise vendors, and to non-merchandise vendors. They obviously furloughed staff. And we as lenders responded by doing a whole handful of things to create more liquidity, as well as alleviate pressure on borrowers. And what were some of those tools that we employed? We did things like defer amortization payments. Much of our debt is structured as term loans, and very often those term loans do have amortization. So we were able to provide incremental liquidity there. Many lenders delayed or postponed all different types of collateral monitoring activities, whether it was inventory appraisals or commercial field exams, or even given extensions to obtain audits, because all of that activity was on hold and paused, honestly.
If we go down memory lane, it was kind of interesting. I think it was the announcement that Boeing had drawn down on their revolver, which triggered just a series of conversations saying, hey, should we do that too? If Boeing, which had a fairly large number, I guess, should we do this? And then there was chatter in the press around, is there going to be a run on the banks, et cetera, and people were just sort of wrapping their head around, okay, we are going to be shut for a while. We have no idea how long a while is going to last. There was a fair amount of uncertainty around, well, is there going to be protection of any kind and relief? And so from our standpoint, we were engaged in so many conversations with so many of our clients around what are all the things that we can do to ensure, to shore up liquidity on one hand, and on the other hand, how do we preserve cash as long as we can? And the third dimension that people started talking about was, especially in the mall-based retail segment, was what do we do if our stores remain shut for 2, 3, 4 months with seasonal product that we have? And so we, our counsel for the most part was and I'll take each one of these in order. On preservation and I guess preserving liquidity and enhancing liquidity, we said, well, to the extent that you can, draw down as much as you can. Number 2 was cut back on pretty much all of your capital spending and just take it down to 0. In terms of preserving cash, we looked as well, and this ties back to the seasonal nature of products, especially in the fashion business. It was, well, is there a way to look at what you have on hand and what you've got sort of on its way in to see how much of it can be mothballed for the future and used next year, if that makes sense. And to the extent that you need to cancel or cut back on orders that have already been placed, go ahead and work with your agent partners or your vendor partners, who, as the case may be, to go basically take down inventory levels by as high as 50, 60%. And I think different retailers had different levels of success in their efforts. And then it was, well, what do we do with rent and payroll? And rent, I think, to your point, John, many retailers took the same approach, which was, hey, we're not going to pay starting in April, and we'll deal with it on the back end. And with payroll, I think some of them were quicker on the trigger than others. And so it was a mixed bag, but those were all of the different things that everybody was struggling with.
Yeah.
And I think the last part that I would say is what was the other thing that was interesting was for the traditional brick and mortar players that didn't really have a fully scaled e-commerce business, they went into a real frenzy saying, okay, what do we need to do now to shore up those capabilities? Because that is literally the only store door that we have available to us. The one thing that was very clear was when everybody sort of got an awareness that this problem in, I would say, late March was going to stick around for a bit. And when I say a bit, it was not going to just be a 2-week shutdown. It was potentially going to be longer than that. At least in the mall-based retail sector, there was very, very quick awareness and acknowledgement that, oh my God, what are we going to do? Where's the relief going to come from? And who's going to listen to us? And who's going to be the body that speaks on our behalf? Because we don't have organized representation. And that was very clear and evident because we did a quick poll, and this was Alvarez and Marcel's Consumer and Retail Group along with ASG. We partnered together and we said, hey, we need to see if there's a possible solution here to help the entire retail ecosystem as it relates to fashion-based or mall-based retail. And so we got, I think both ASG and us, we started contacting our own client base and networks. And in the course of literally, I would say 24 to 36 hours, there were 85 CEOs and CFOs of mall-based retailers on a 3-hour call with us, trying to help lay out a series of asks that were articulated in a very meaningful way to address specific needs around economic impact and financial viability for themselves as businesses. How do you deal with, store personnel, potential displacement, unemployment levels that then can have a ripple effect long term? What can be done from a liquidity and working capital standpoint in the near term and in the medium term, as well as, hey, are there things that potentially the government should be thinking about to spur capital investment to, at that point, the thinking was, even if the shutdown lasts 60 days, there is going to be something on the back end of the shutdown. And what can we do now to spur growth on the back end? So these were the big topics, if you will. And we had about 85 clients or companies represented on the call saying, and it was a brainstorming call to lay out what are the challenges, what are potential asks and solutions. And then the question was, well, what would the right forum be, and how would we get these asks to whom? Basically to Congress and the White House. When the group got together and they were brainstorming solutions, they weren't just thinking about themselves. They were actually thinking about the entire ecosystem. And so they didn't want relief. And it struck me as very, very interesting that they didn't just want relief for themselves. They were thinking of the entire ecosystem, but also the social impact from a longer term standpoint. And so one of the things that they wanted to do was, hey, can we get the government to fund not just the rent for store closures during the time when the stores were closed, but is there a way that the government could also provide relief to the landlords in terms of whatever, relief on loans that the landlords might have against their securitized assets, et cetera, et cetera. So that was interesting. The second part was on store labor. What they were looking for was, in essence, an extension of unemployment benefits and removal of work requirements for social aid programs like food stamps and stuff like that. That was similar to what was done in 2008. I guess between rent and store labor, the two biggest cost buckets typically for a retailer, the thinking really was, is there a way we could get some sort of business continuity insurance and put that in place and then get relief from that and use that as the vehicle to offset the cost without the revenue impact, if you will. And then there was another interesting idea around liquidity and working capital, which was the notion of either a rollback on duties for 6 months, because just before this hit, many of the apparel players, et cetera, were subject to looming duty charges as a result of government action from late fall of last year to early spring of this year. And so they were looking to say, hey, is there a way we could do a temporary rollback on the duties, or can we defer duty payments going forward for a 12-month basis with no interest and penalties? And lastly, could we do a tax credit for all payroll taxes for the remainder of the year? So there were some creative ideas that were certainly being, teed up. And I think the other interesting thing was in terms of thinking about post-COVID, when stores reopen, what are some of the things that could be done? I think there was one creative solution saying, hey, is there a way to create incentives for capital investment? And I think the most interesting idea, at least that I had heard, was, can we do accelerated deductions and credits for all IT and PPE spending, which was, I thought, fascinating. At the end of the day, we had a few of these conversations. We had a fair amount of correspondence back and forth with the NRF. And the NRF actually in around mid-April said, hey, their ask back was, we are starting a grassroots campaigning effort with Congress and the White House, and can you have all of the interested parties sort of participate in this grassroots campaign? Go talk to local officials and local congressmen and even governors if you can, and say, hey, ask for this. And I think there was an effort in Ohio and in Oregon, in California, which at the end of the day, all of it amounted to very little for the mall-based retailers, to be honest.
Yeah, I think what we realized is when we had the call and we were able to bring a lot of the C-suite people together in that call, we also asked, landlord partners to join that call, because honestly, the only way to survive was for us to pool together. This is the first time, beyond just opening and performing, is that we actually had a common problem that we needed to work together with. And we had some landlords on that call. But I think the big miss is there was no core organization or no core lobbying group. We started looking for a lobbyist to help us early before the PPP was even discussed about retail is a significant portion of our economic survival, right? And even today, I think in Washington, they don't realize how much is driven by the retail economy, not just service performance and people in the field and operations, but everything that survives off retail is such a huge portion of GDP. And that was not represented. Airlines were the first people to get money. But there was a big battle about bringing these C-suites together and landlords together to have this conversation about, we need to have some kind of business interruption, federally backed, guaranteed business interruption insurance, which would have held off a lot of the bankruptcies. I think there are about 27 retailers that have gone through bankruptcy. I think before the end of the year, we'll probably see a lot more file.
I was starting to send people, clips from The Office where Steve Carell, declares bankruptcy, running around the office shouting, "I declare bankruptcy." So it kind of was like that. People who had probably no idea what declaring bankruptcy really means, going around asking questions or declaring bankruptcy on phone conversations. So it definitely was thrown around a lot. The reality of it is, bankruptcy is truly a last resort in almost all cases, in all scenarios. It is not something you want to go through unless you absolutely have no other choice left, right? So as long as there's another lifeline available, pursue that first and foremost before you actually go through the bankruptcy process. It's a very costly and disruptive process to go through. It is not as simple as, oh, I'll just go declare bankruptcy and all my problems will be, kind of thrown out the window and I'll get a fresh start the next day. If it was that easy, a lot more people or companies would be going through bankruptcy on a probably weekly basis. But as Sanjay mentioned, that wasn't the case for a lot of companies, which I think a lot of retailers came into this situation already in a relatively unhealthy position from a balance sheet perspective. Most of them were probably a function of past leverage buyout activity that put a lot of debt on some of these companies' balance sheets, and they were somewhat struggling through it, slowly working their way through it, and then when something as disruptive as this happens, a true shock to the system, it kind of just becomes the final straw that breaks the camel's back.
Certainly there were certain situations and instances where it made a lot of sense for the entities to pursue the path of bankruptcy. And for others, it really wasn't much of an option. And what was interesting is many of them have sort of come out of it, come out of the crisis, if you will, with stores now being open, but now are facing a whole new set of challenges with, traffic. Stores are open, but traffic is down, again, somewhere between 30 and 60%, sometimes even higher than that. That's one challenge. The second challenge is from an e-commerce standpoint. Holiday this year, which for most mall-based retailers is the biggest season of the year, is significantly compromised. And from an e-commerce standpoint, there's also a fair amount of constraints being placed on the supply chain in terms of the volume of packages that can actually go through the chain this year. So I think this is a year unlike any other from a set of challenges perspective. And I do believe that the retailers in general have done a tremendous job in navigating through it. I think it's going to be interesting to see what the implications will be from a pure bankruptcy standpoint over the next 12 to 18 months.
The federal government's stimulus programs to support businesses, whether it's the PPP loans or Main Street lending, unfortunately don't seem to have really made a difference to specialty retail. And then as far as the Main Street lending program is concerned, which would be on paper at least a resource to larger retailers, wasn't really viable because the construct or the structure of the way that the program was created doesn't really dovetail or work well for businesses that have asset-based loans. And what I mean by that simplistically is there wasn't a viable path for a retailer to have both an asset-based loan and a loan from the Main Street lending program and have those coexist. So, but for some smaller specialty retailers who were able to access PPP money, in general, I didn't see that the federal government stimulus was really all that helpful.
Yeah, in the absence of all that, you went back to the same, places that you were going to in the first place around cutting expenses, slashing your capital spending, obviously tapping into all credits that you had available, and lowering your cash outlay as much as possible. It became a survival, on your own type of approach, without really having any kind of assistance from anyone else outside. That's kind of where we are still today.
I think one of the best things that has happened, if I can switch here to the second, is I think some of the things that has happened because of the pandemic is things that were always in the budget or always on the sideline, right? Digital's always been part of the consideration, but never, how do we implement long plans on how to get them implemented? You saw firms in a very agile environment, and that's what retailers do best. In the heart of something when it's tough, they figure it out. They figure it out, meaning may not be 100% of what they would have been in the plan, but guess what? It was 80% of the plan. And within 60 days, you saw curbside delivery, you saw curbside pickup, you saw people adapt to an environment that they wanted to adapt to out of survival mode. And I think that has helped the retail community understand the significance and the importance of it. And so when you think about what is retail on the other side of it and the survivability of brick and mortar on the other side, what we've seen is certainly an accelerated e-commerce growth and digital experience. But what we haven't seen is 100% or 200% digital e-commerce growth. And I think what people realize is that you have to have all of the mechanisms in place for the consumer in order to be a true retailer. It may look different, which is great, and they're ready to adapt to different, but it's not the same as it was prior to COVID. It's a much different experience, and I think they're going to have to react to that.
If someone were to ask me, like, post-COVID, what are the kind of the biggest, I guess, topics of conversation do you expect to be the biggest topics of conversation post-COVID? In my opinion, it's gonna go back to the same thing that has actually been probably the biggest topic of conversation, but it'll be even more so post-COVID is again, the brick and mortar and the traffic in malls, and what do you do about hundreds and hundreds of physical locations, especially if post-COVID the footsteps and the traffic is just not there, or that decline that has been going on in brick and mortar has now all of a sudden been accelerated by 5 years over the course of 9 months. What do you do about that fixed cost base that is your physical store footprint with a fixed rent structure and to some extent fixed payroll structure? What do you do about that?
Yeah, I think mall spaces, to your point. So what do you do with all the malls? So there's a big hesitation. We'll just address this, right? So there is a big hesitation about a lot of malls and being confined, and what is the future of that mall? That mall is changing very quickly right now. You're going to see more multi-use. Some boxes are going to come down, hands down. We needed to shut some. But what I see more than anything is that I see the direct-to-consumer brands on the side who witness that this is an excellent time to take the opportunity to expand. And for those brands, they're always aware of the consumer. That's one of the best things about these brands. And they recognize now's the time to step in, not step out. And so we're working with those brands. Those are the ones that are coming to the forefront. You don't close 27, 30 retailers with, 30 billion, 50 billion just in market share going back into the market, and no one's going to answer the demand. There's huge opportunity for the people that understand that consumer experience is a little bit different than it was before, but now's the time to step into it for sure. So the GLA and what's out there is going to get reconfigured in a much different presentation. I think everyone's ready for it. It's okay. They're very willing and ready to receive what that is. I'll also say that for the most part, savvy retailers are they don't have to be in the mall. It's okay. And that from the format perspective, it's not the same format, right? So these are much different formats, much more flexible formats, not the same size, not cookie cutter, and that they're using the space in such a innovative, creative way that answers the need for the consumer. And that's just the most exciting part about retail coming around the corner. I think, I alluded to the fact that being flexible in terms of not just where you are and where you want to be, but your sizing, your design. I think it has to be a little bit about making sure that what you're offering that consumer is local, right? So localization and regionalization is a product it's multiple things, right? So being able to put a design and on the right size store and the right fit store along with the right product mix is really the challenge for the next wave. And we've been talking about it for about 2 years. And I think that brands are ready to understand that everything doesn't have to be the same anywhere. You're not really talking to the consumer the same way when you're making a cookie cutter kind of image and you're putting that across. There's no thrill in that, right? And so when you really thoughtfully think about how do I want to present myself and how do I want to communicate, that regionalization and localization will be a big win for the retailers that can execute that well.
The one thing I would say about retail is that it is an incredibly important industry and sector in our economy. It represents a huge, huge percentage of GDP. And the internet and e-commerce was not the death of brick and mortar like people originally thought. And I don't think COVID-19 and this awful, terrible pandemic will be the death of retail either. Retail has always been an industry that does a great job at evolving and changing to the consumer demands and how the consumer wants to shop. And that won't go away. It's just an evolution that the industry is having to experience because of this pandemic. But I am highly confident that there will still be a retail industry when we get to the other side of this.
We want to support you. Meaning lies within you.
Thanks for watching, and join us for the next episode, The Reopening.